The analysis of candlestick charts makes trend analysis very simple. As we can see, when the Dow broke through this resistance level, which was a continuation of a trend channel that had been developed over the last 4 or 5 months, when it broke through this level, especially with a gap up and then followed with kind of a gap up kicker type signal, the analysis of the new trend remains simple in the fact that there is no sell signals and a close below the T line. With that assumption, it's pretty clear that investor sentiment does not have any selling pressure or bearish implications, allowing the strong candlestick charts to perform. When you analyze human nature, it's very common sense analysis. As we can see, there was a little J-hook pattern right at the breakout level in the NASDAQ, which had also been in a sideways trend for the last few months. The fact that when they got to the resistance level, and I say the market got through the resistance level, they gapped up through that level, giving us a clear indication that that resistance level was not a concern anymore. After that, you can see how everything has continued to support off the T-line and head higher. So the assumption is we might be in a nice strong wave 3 after months of consolidation or sideways move, putting us in a bearish bull market, obviously. This allows us to continue to put long positions on that have the results expected coming out of strong candlestick patterns. For example, notice how Netflix had been trending up, then pulled back. The fact that they pulled back right to the 50-day moving average and then followed up with a bullish harami, and we know the bullish harami being one of the 12 major signals tells us the selling has stopped as soon as it started trading positive and above the T-line, confirming the bullish harami. It told you there was a high probability we are back in an uptrend. And not only in an uptrend, but we can see kind of a relatively flat handle and the scoop pattern. And we know what to expect coming out of a scoop pattern. A strong slingshot effect, which in this case may have the potential of taking Netflix all the way up to the 200-day moving average. When you analyze what each individual signal does at a specific area of a pattern, as we could see in our recommendation a couple weeks ago on TIVA, the fact that you had kind of a fry pan bottom, you were right here at the breakout level, and note this pattern or this signal right here. This is what we call a bullish flutter kicker signal, which is basically constructed by the fact that it closed, the trading opened here, closed here, then they gapped up to the top end of the trading range and did a doji. And we know the simple doji rule. The price is usually going to move in the direction of how they open after a doji. In this case, we're expecting positive trading on the positive open after the doji, which becomes a bullish flutter kicker because basically if you take out this little flutter, you've got a kicker signal, which is one of the strongest candlestick reversal signals, which pretty much indicates that they've broken out through the fry pan bottom, expect a lot more upside. Having the ability to recognize the signals and the patterns in conjunction with each other allows a candlestick investor to put trades on that have dramatically improved probabilities of not only being in the right direction, but also in very strong price moves. We've been in GOSS because the fry pan bottom startup. Then we had a belt hold signal. A belt hold signal pretty much takes out all the sellers, which means any buying after that has less sellers in the way. It got up here to the fry pan bottom breakout, and then what is expected after a strong price move coming out of a fry pan bottom. Note how we expect a J-hook pattern to be setting up with dojis and bullish confirmation above the T-line, giving us this little J-hook, which makes it very easy for common sense entry strategies. If this opens positive tomorrow, continuing the J hook, breaking this resistance level, now our next expectation, which is fairly common, is that wave 1 and wave 3 will be the same magnitude. Applying the signals and patterns together at important technical levels that everybody else can see puts us in positions where we have an extremely high probability of being in the right direction at the right time. And additionally, knowing that the overall market is not changing direction, that the magnitude of those trades are going to be fairly strong because of the expected result of a pattern breakout. That'll be it. We'll see you in the chat rooms.